Are investors sitting on a profit gusher from the oil patch in 2025? Well, it depends. Wall Street is only forecasting crude oil prices will range from $76 to $65 a barrel next year. President Trump's plans for tariffs on Canada and Mexico could potentially send prices rocketing higher. Lipow Oil Associates President Andy Lipow is here. Andy, always nice to get some time with you here. I think investors are still trying to figure out if we get more domestic drilling, if President Trump pushes through some of his agenda, what do you think it means to oil prices? And then secondarily, what does it mean to some of the oil majors like an Exxon?
Well, thanks very much for having me. Trump has the philosophy of drill, baby, drill, and their administration is expected to ease regulations enabling oil producers to drill on a more efficient basis by getting permits sooner rather than later. However, setting that aside, if we just look at the oil market sitting at around WTI of $70 a barrel, this is really the biggest impediment to substantial growth in the oil patch. We're already going to hit a record of about 13.2 million barrels a day of U.S. production this year. It's forecast to rise to about 13.5 million barrels a day next year. But if we look around the world, the oil market is oversupplied going into 2025.
We've already got record production out of Canada and Guyana, as well as some new supply coming, and that has come online from Argentina and Brazil that you mentioned. What has that done to the mix here in terms of just the inputs and different sources of production around the world, and how that could have also some geopolitical implications?
Well, it certainly has pressured OPEC Plus to delay and defer the restoration of their voluntary production cuts, which amounted to about 2.2 million barrels a day over 2 years ago. If we look at OPEC Plus's spare capacity, it's now well over 5 million barrels a day. And as a result, the oil market is not particularly concerned about supply over the next few years, especially in an environment where Chinese oil demand growth has disappointed, especially in 2024. If we look back to January, it was forecast to grow about 700,000 barrels a day. Here in December, the forecast for Chinese oil growth has dwindled to about 180,000 barrels a day.
Andy, maybe I'm watching too much of Paramount's new show, Landman. Whatever it is, mergers and deal activity in the oil space is top of mind for me. The last big deal we had, of course, Chevron purchasing Hess for $53 billion. Is there more consolidation you see happening in the industry, in large part because of a friendlier Trump administration?
Well, I do expect that consolidation is going to continue. There are not many large players left, but the oil producers need the consolidation to improve their efficiency, which we're certainly seeing on the drilling front, doing more with less rigs out there. And of course, they're looking at returns to shareholders, given that WTI prices are sitting at around $70 a barrel.
Andy, I wonder here, and I was looking through your notes to see if there was any mention of this, but the Keystone XL pipeline, this is something that Biden had fought back against, and now it seems like President-elect Trump, when he gets in office, is going to try and restart talks, conversations, and then ultimately bring that to fruition. What are your anticipations around that?
Well, the Trump administration may be very likely to issue a permit for Keystone XL and its expansion. But I think if I look out in the field and how much the cost of construction has increased over the years, combined with a new expansion of the Trans Mountain Pipeline, adding capacity out of Canada to the Pacific, I think that the market is probably in the near term going to be reluctant to proceed with any construction, especially if they're faced with local opposition along the route.
How much do you think that would add to the deficit, if anything?
Well, I'm not sure that Keystone XL itself will add to the deficit because the construction costs will be borne by the producers or the shippers of record. But I think what I am concerned about is if Trump enacts his tariffs on Canada, as well as Mexico and the rest of the world on energy, that adds, of course, to the cost of energy here. And ultimately, that's going to impact on consumer spending, as well as some tax revenues to the government.
Andy, thanks so much for taking the time to. Happy holidays as well.
Thanks for having me.